he has said that basically gold was his largest position and that we're approaching potentially a realignment of the global monetary system, very similar to a Bretton Woods kind of moment. And I do think we're about to see something along those lines, and that he wants to participate on that from the inside and the outside. And so all these things are extremely important.
This is Kaiser Johnson with Liberty and Finance, and these are the Miles Franklin Weekly Specials for November 25th through December 2nd, 2024, while supplies last. First, we feature backdated 1-ounce silver Austrian Philharmonics at just $3.09 over spot per ounce. We also feature the limited edition 2024 1-ounce gold UK Lion and Eagle coin at just $99 over spot per ounce. And finally, 1/10 ounce gold Britannia are just $29.99 over melt per coin. To order our specials or any of the many other options we have available, call us at 1-888-81-LIBERTY. That's 1-888-815-4237. We're available after hours and on weekends, and we look forward to speaking with you.
Hey everyone, this is Elijah K. Johnson with Liberty and Finance. And back with us today is our good friend, Tavi Costa, partner at Crescat Capital. Tavi, thank you so much for joining us today.
Thanks for having me. Looking forward to this.
Well, it's great to have you today. I did want to discuss Trump's pick for Treasury Secretary, Scott Bessent. And there's a lot of talk about what you had mentioned in a tweet that, it seemed like the market's reaction in the precious metal markets was very negative to this announcement. But in some respect, this could be very good for the gold market. I wanted to ask your perspective on this pick for Treasury Secretary and how it might impact the precious metals.
Absolutely. I think it was undeservedly negative for gold, although I can see why gold would sell off. If you think about the reasons, is potentially just because he's likely to be a pick that will change quite drastically the probability of government that has been so reckless for so many years. If there's ever somebody that could potentially change that could be him. So you've had 10-year yields actually decline on that day, and gold sold off significantly. And that's just I think, misunderstanding the bigger picture of his pick. I think Bessent is a very capable leader, number one. I think he's probably one of the best Treasury Secretary picks we've seen in many decades. And I think this brings a lot of changes to the precious metals industry, given the fact of his own views mentioned in some of the interviews that he's done 3 weeks ago, for instance, with capital allocators, where he mentions in a question to him where he has said that basically gold was his largest position and that we're approaching potentially a realignment of the global monetary system, very similar to a Bretton Woods kind of moment. And I do think we're about to see something along those lines, and that he wants to participate on that from the inside and the outside. And so all these things are extremely important. None of us really know exactly how this will play out. But this is a significant change to the global economy, given the fact that we're seeing central banks accumulating gold in a large pace. And also the fact that we know that they meaning monetary authorities, are in need to really replenish and also enhance their balance sheet by backing their currencies again with a metal like gold. And so these are real important changes in the dynamic of how the U.S. may play a role here in terms of the reserve currency status. I think, as Bessent has said many times, we can grow our way out of this, and this is probably your last chance to do that. But that comes at a cost. That comes at a cost of the dollar. And the dollar needs to be devalued, in my view, in a large way, as we see the cut of fiscal spending along with potentially lower monetary looser monetary policy in order to accommodate the debt. And all that is going to have an impact on the dollar itself. So this only strengthens my view about the US dollar.
And when it comes to the dollar peaking and how this could impact the US dollar, what is your long-term outlook for the US dollar? Because I know you've recently said that the dollar is probably peaking soon as we've seen this rally.
Yeah, this rally on the dollar is very unusual. So, we've had a 7% increase on the DXY index, which is measured by looking at the dollar, US dollar versus the euro. It's weighted by looking at versus the euro, versus the British pound, versus the Japanese yen and Canadian dollar, Australian dollar, and others are smaller weights. And you can see clearly that we've had a big appreciation of the dollar. And, the last 40 days, 7% increase, 70% of those days were positive. That only happened when Trump was elected in 2016, of which the dollar also strengthened significantly for the next weeks. And then we peaked. And a big decline of the dollar happened once all the way to the beginning of 2018. 2018, we had a big, very challenging year for equity markets. And then the dollar actually rallied again. And then the dollar rolled over once at the end of his term. And I think that this is kind of similar to where we are now. We've seen this big increase in the dollar. And I would, personally, I would be fading that movement because I don't think that's sustainable. The dollar is basically moving because of the 10-year yield has moved so much, and we've had this potential change as well from an inflation standpoint. Because of the Trump administration coming in and the market starting to price in that we may see more inflation. But some of these expectations by the market are usually wrong. And Trump has said repeatedly that he wants to have a weaker dollar. And this actually reminds me of the times when we had the moments when market participants used to say that policymakers can never create inflation again. And then we had, modern monetary theory, ideas coming out and all these thoughts. And Gulak said something that was very smart. Basically, he said, look, if you want to create inflation, all you need to do is just give money to people, in a larger way. You will see everybody spending, and inflation will surge very quickly, and we'll get inflation in about 15 minutes. And that comment was so correct, in my view, that I think people are understating the power of a president to reduce the value of its currency through its policies. And I don't doubt it that would take place here. And I think that's actually inevitable. I think that's actually the only way out in order to grow our way out of this situation. So that's basically what I think this is going to come to. And so, I'm very concerned about the health of the US dollar versus other currencies. And as we see that peaking, I think we may see other trends unfolding, like emerging markets doing better than US markets in terms of equities. And that would be a big change in the whole macro environment as well.
You've mentioned how 2024 is really gearing up to be the worst year relatively. So other countries' stock markets versus the US, so foreign stock markets versus the US stock market. Foreign stock markets have underperformed the US more dramatically this year than in the last 25 years. So can you expand on that and how this realignment may impact the people who are investing in the US stock market?
Yeah, look, I think there's going to be some big changes in leadership. And I think, historically, the dollar is aligned with the relative performance of the U.S. equity market versus other parts of the world. And we've seen almost 30 years, 20 years of, over 20 years of I should say less than that, but about 15 years of performance of strong relative performance of U.S. equity markets versus the rest of the world. And the valuations of companies in the U.S. are very frothy relative to other places. And I think that's the most egregious asset class when it comes to this last cycle that we had on the dollar, right? When you have a cycle on the dollar, you tend to see the inflating process of a few asset classes. And this time, the biggest one was U.S. equities versus other places in the world. That's really where things got really frothy. And as we see the dollar peaking, flows tend to come out of the U.S. dollar and go to other places. As we see that, I believe that other markets can actually significantly outperform the U.S. market. And so just remember that back in the 60s, but we did see a period from the 60s to the 90s. That's almost 25 to 30 years, actually, of outperformance of the rest of the world relative to the U.S. That would be unthinkable today. And I think that's that level of hubris that market participants have today, that the U.S. will continue to dominate this for longer, is, in my view, the biggest reason why we may not see that happen. And I am very concerned about that transition, because I'm not sure it will be a peaceful transition either, meaning peaceful, or I should say harmless. I think it's going to be painful for investors when capital flows out of one place into another place. And I think we're in the process of seeing that right now.
For investors, then, your outlook for the next couple of years as we look into the U.S. stock market, precious metals, the value of the U.S. dollar, it sounds like there are major changes coming with this new administration. And I mean, if you have someone who's, a strong advocate of gold, and your perspective on where this could all lead.
Look, we're using Bessent's own words and in interviews. We're in the process of, driving a car onto a wall, and that wall is a wall of debt. And in markets, you want to be seeing, policymakers hit the brake at some point and cause some major changes in policies. And I think we're kind of in that process of seeing that right now. And what he claims to be the last chance of us attempting to make that, that idea of growing your way out of the problem. And growing your way out of a problem, historic as always, means devaluing your currency versus, having a strong nominal growth and allowing inflation to run hotter than historical standards, rather than focusing so much on inflation, focusing more on letting inflation go, but also focusing on growth first and foremost. I think that would be the case as well here. And so, I think this is going to be one of the most, one of those times where macro really matters. And we're in the process of seeing, that ability to become critical for investors, and understanding that despite how smart some of these policymakers are, like Bessent, we do have big imbalances in the global economy and the U.S. markets too, that will make some of these potential changes extremely challenging and unlikely to be without consequences. So I'm trying to choose my words very carefully, but I hope I describe it well, because I think this is going to be a real change in sea. And in terms of leadership, in terms of valuation of businesses, in terms of balance of powers. And I would be shocked if, especially some emerging markets that are very neutral, like places in Latin America, for instance, don't play a bigger role capturing a lot of the flows that will be coming out of the US dollar. So I think this is going to be extremely bullish for emerging markets. Hence, when you think about it, we're probably entering a long-term, we've been entering here already a very long-term secular, long-term is secular, shift for gold. And usually those trends tend to be aligned with other things like emerging markets doing well, miners doing well, oil companies doing well, and all these things lack capital. And so it's almost convenient to see capital flowing back to those pockets of the market that have been really lacking sufficient interest in capital to run their businesses appropriately. So this is going to be very exciting for those that are in the right part of the market here.
It seems like the perfect storm for gold. If we're seeing the dollar fall, we're seeing U.S. equities underperforming. I mean, that's kind of a stagflationary environment. Is that what you see ahead, or what specifically?
Well, that's, this is going to be the challenge. Is it really stagflationary, or is that's the part I haven't figured out. I think I fall more in that category too, but certainly growth could play a role here too. Like you could see an environment, well, let's say it's the 70s, it was a very stagflationary era, right? But if you look at nominal growth at GDP was positive throughout the whole era. And then I know what people say. They're all going to say, well, but that's because of inflation. Yes, that was inflation. Real growth was a little bit different. In fact, the equity market didn't go anywhere throughout the whole decade. I don't know if that's a redux of that. Like that's the part that I'm thinking a lot about. I think the equity market may reflect that because the valuations are so high that I'm not sure we can see a lot higher unless we're going to hyperinflate out of this, which is another possibility. I mean, if policymakers fail, we can hyperinflate our way out of this. And that's a scary world for where gold could trade in that environment. So the point being is that those questions might be too technical to answer right now. And maybe we don't have to go that far. But not that we do know this, but what, you're trying to get to a level of confidence to deploy capital. And in this case, it's hard to believe that this set of potential outcomes we have on the table will not benefit precious metals and will not benefit miners in response to that. So there's a lot of things that are mispriced in a world where these assets become critical again. And so this is very interesting, actually. I think this is one of the most exciting times of my career, at least, because I can see this as a pivotal, marking a pivotal moment for the history of macro in general, with potentially radical changes in how things can be structured moving forward. Without saying much more, I think that's this could be extremely positive for the precious metals industry, and onshoring and manufacturing and industrialization and allowing the arms race of AI. All that is also going to be very important. And it's hard to believe that the industry of mining won't be seen as critical as it used to be in the past. So last thing I would say to you is, not last thing, but one thing I should say to you is, back in the 60s, the mining industry used to account for about 20% of GDP, and today is less than 0.5%. In fact, it's 0.3%. So we have been solely reliant on importing metals and ore. And I would be shocked if 10 years from now that's still the case. If it is the case, it will be a change to South American source, in my view, of those minerals rather than, places like China. And keep in mind that most of the refining capacity in the world today is coming from China. So it's an interesting world that will create, in my view, a lot of opportunities that are going to look very different from the last 10 years.
And how does this all impact silver then? Last question would be your perspective on silver. We're seeing gold near all-time highs. Silver is still about 60% of its all-time high. In this new environment we find ourselves in, what does silver look like?
It's the most exciting metal out there because I just don't know how, if we see a stagflationary environment where gold really trades a lot higher, just gold moving higher should be extremely positive for silver. Then we have this move towards solar panels that even Musk has tweeted about being one of the main sources of energy that we may see in the future. And how will silver play into that if that's the case? And then you have the monetary aspect of gold leading the way. Gold is already 40% above its 2011 levels. I tweeted this a few weeks back. But silver remains 30% below its 2011 levels. And so you got this kind of crazy gap between these two metals that are completely unsustainable. So, none of us, in my opinion, own enough silver. And I think this is extremely bullish for that. So, let's just say, what if we're going to grow our way out of this and not see a stagflation environment like we're talking about here and end up seeing major industrial changes and all sorts of things that actually help silver in a huge way? This could be the decade of silver even. Who knows? I mean, I don't know. I'm just talking about probabilities, and I'm just trying to express my views about how bullish I am in the metal, but it's hard to pinpoint how big the opportunity is. But I do think there's major opportunities here for the metal to do very well.
Well, Tavi, Costa, we'll have to continue to track this with you. It should be exciting times ahead. If our viewers are interested in learning more, they can go to crescat.net. You're also on Twitter and YouTube, or X and YouTube. Can you tell us a bit about that?
Yes, I usually share daily or almost daily some of my macro views, and I also tend to write letters at crescat.net that get posted. I usually write it every 2 months, and I'm in the process of writing one right now. So hopefully I have some time to read some of those reports. But I appreciate the interview and look forward to speaking with you again soon.
Fantastic, Tavi. Thank you so much. God bless and happy Thanksgiving.
Thank you. You too.
This is Kaiser Johnson with Liberty and Finance, and these are the Miles Franklin Weekly Specials for November 25th through December 2nd, 2024, while supplies last. First, we feature backdated 1-ounce silver Austrian Philharmonics at just $3.09 over spot per ounce. We also feature the limited edition 2024 1-ounce gold UK Lion and Eagle coin at just $99 over spot per ounce. And finally, 1/10 ounce gold Britannia are just $29.99 over melt per coin. To order our specials or any of the many other options we have available, call us at 1-888-81-LIBERTY. That's 1-888-815-4237. We're available after hours and on weekends, and we look forward to speaking with you.